Chris, can you introduce yourself, your current role, and how this relates to building a brighter future?
Good morning, Rosie. Thank you. I head up the Regional Development Programme at Lloyds Banking Group within the Commercial Bank. We set up the programme 3 or 4 years ago, and with the goal of really following fast after environmental sustainability. Lloyds has historically invested, and I think rightly so, in environmental sustainability, but less in social. So a small team has got together to look at how we could create social impact within the commercial bank. What would that look like? And that was the start of the programme. So that's my role within Lloyds.
Amazing. And for Lloyds Banking Group, what does social value actually mean?
So as a bank that was born and raised in the regions, we actually grew up here in Birmingham, in fact. We see ourselves very much as a UK regional bank, and one where regional development, so economic development of the regions, regional productivity, regional inequality, are areas that we feel we have an obligation and an opportunity to contribute to. So for us, social value was making sure that our lending was going to every part of the UK, not just I guess prosperous regions, but also less prosperous regions, because ultimately our mission is to help Britain prosper, and we need all of Britain to prosper if we're going to prosper and our shareholders are going to prosper.
How has that been? What bits have been kind of more challenging than others?
It's been a fascinating journey, actually, and we spent some time as we were setting up the programme, we were looking at the strategy, working with practitioners in the States and in other countries to look at their impact programmes, to understand and try and learn intelligently about where they'd focused. And for us, we tried to narrow it down into 3 specific areas. Firstly, how could we create more incremental lending into low-income regions, particularly for support for small businesses, so businesses that typically can't get access to mainstream bank finance. So there's many business customers that we lend to day to day, but then there's a whole swathe of customers that probably never make it through our front door. So how are we addressing financial inclusion? How can we create structures, blended finance, ways of working with others to create avenues for these small businesses to get access to vital credit? And we can talk about a few more examples of that in a minute. The second area is social and affordable housing. I think everyone knows the narrative in the UK well, but right now there's a dreadful lack of social housing. There's a real challenge that RPs face at the moment, so registered providers face. It's the sort of almost perfect storm of the cost of new build, the cost of retrofits, and of course the heat map, which is the damp and mould challenge, and making sure that tenants have healthy warm homes. So that's an agenda that we've lent into really strongly as part of the programme. It's also part of our CEO's mission, Charlie Nunn's been calling for 1 million new social and affordable homes over the next decade. Now we recognise that's not something that we can deliver by ourselves, but it's something that we need to do in partnership with others, and hence why I think it's so relevant to today's conversation for sure. The third area is around greening the built environment, so focusing on how we can decarbonise our building stock. And that's particularly acute in areas like social housing. So you may have seen we recently launched a partnership with the National Wealth Fund, which is the first of its kind, and it will see us put £500 million into social housing retrofit to help create warmer, hopefully more healthy homes for tenants. So those are the 3 areas of the focus for the programme. And I guess you talk about some of the challenges, and we can get into those in a minute, but some of the things we found is the narrative around social value is less well known across many stakeholders and practice groups. So trying to explain what you're looking to do, trying to help people understand and take on a journey, that was probably the first hurdle that we had to overcome.
Amazing, and that's definitely what we find, because it's different in certain sectors. There are nuances, but there are big pockets of people that still don't really understand what social value means. So it's great to be having this conversation with you today. You mentioned blended finance. What does that mean to you, and can you give us a few examples?
Sure. So blended finance really is a strategic use of different sources of funding that come together to create an outcome that ordinarily wouldn't have happened without them. So it could be a combination of private capital, public sector money, philanthropic capital that collectively can create impact. And I guess a good example of that is the lending that we provided earlier this year to 3 community development banks in the UK, one of whom is on the doorstep here in Wolverhampton, so the Black Country Reinvestment Society. And that was a combination of junior capital from Better Society Capital, senior debt from Lloyds, but also some equity from the participating community banks, supported as well by the British Business Bank. And that allowed us to participate in the sector for the first time, so we were the first mainstream lender to extend credit to to these small community banks that do outstanding work in some of the UK's most deprived regions. So it's finding a way to bring together different sources of funding that can overcome viability challenges to create a project that ordinarily wouldn't have happened.
And that's incredible to see that this collaboration is happening. I know BCRs do amazing things in the region, and support. Miss Macaroon has actually had funding from BCRS. It was repayable finance, again blended through a social impact programme, and it's enabled us to create so much more social value and support so many more young people. And actually, we wouldn't have been able to go to a Lloyds and get that money. So it's great that the funding is going into these really locally embedded organisations that have these links into these communities and can fund smaller organisations. So that's brilliant. You also mentioned social social housing, and yes, you touched on the really pressing need that is happening in society at the moment. What do you think the kind of things in the future are? What does it look like on the horizon in terms of social housing?
So I think it's great that the new government have made it a key priority, and it's super to hear that the new Mayor Richard Parker has also highlighted it as a key priority. Really, I think, and if you read the Labour Party manifesto, I think it mentioned public-private partnership no less than 17 or 18 times. So it's very clear that the country as a whole has a challenge when it comes to funding. There isn't enough money to do everything that we want and need to do. So we need to think creatively, and I think when you look at social housing, it's how do we create new vehicles that can help finance social housing, whether that be for new build, whether that be for retrofit, and the example I mentioned earlier around the National Wealth Fund is a good one. We hope and expect that this will be the first of many sorts of transactions that we'll do with the National Wealth Fund, and indeed other banks will do as well. 500 million sounds like a big number, and yes, it is a big number, but if you look at the scale of the challenge that social housing providers need to address, it's going to require a lot more funding and capital, and therefore, hopefully, by crowding in others, other lenders can provide additional sources of capital, and collectively that will magnify the contribution. So we feel there's a real opportunity where partnerships, and I'll come back to this idea of blended finance, working with others who are prepared to commit capital, will help accelerate some of the opportunity that we see in social housing over the next decade.
Amazing. And when you think about some of those projects that you are funding or will be funding, how do you evaluate social value as part of that process?
It's a great question. So typically when we fund projects within our regional development programme, we have a dedicated investment committee that oversees them. And the first question we ask ourselves is, well, firstly, what's the purpose? What's the impact? What is the value that it's going to create? And we do that before we even get into what's the credit risk, what are the likely returns. We'll look very carefully at where it is. How does it align to public sector priorities? What have elected officials, what have local and national governments said about it might be a development, or it might be a project such as the community banking project. So we try and tease out what is the impact that it's genuinely trying to create. Can we measure it? And in some cases, I think you've always got to be careful what you stretch for, or at least what you claim that your money is helping to do. But in the case of the lending that we did for the community banks, particularly with BCRS, it was really pleasing to see that Sheffield Hallam, leading higher education institute, was undertaking the impact assessment. So there is a regular impact assessment that's published annually on the results of the lending that we're providing. And we feel that's really important, particularly in light of green and social washing regulations that we now have to rightly abide by. So we look at the impact in a place. What is it contributing to a place? If it's lending to, as I said before, community banks, how is that creating virtuous cycles within the local economy? Because clearly if you're helping businesses start up or get their second round of funding, this is helping to create jobs. Those jobs are creating spending. That spending is creating hopefully prosperity in the local economy. These are the sorts of factors that we'll look at. When it comes to the built environment, we'll look at things, particularly if it's economic infrastructure. So what type of building is it? What's it trying to create? What's the ecosystem that will flourish around it? I could pick an example in one city where we've got a very close relationship. We're looking at a major development on our science park. They were very keen to create new assets that would crowd in high productivity, high skilled jobs. And this was part of the city region's economic narrative to say, we're transitioning away from an over-reliance on tourism and entertainment, which are both still important parts of our economy, but we want to broaden it and capitalise on what's already quite a vibrant life sciences sector. And we know that other cities are trying to do the same thing. So we look at What's the intention of the asset? What sort of jobs will it create? Where do they rank in terms of skill? And we'll also overlay things like the index of multiple deprivation to see what the impact is in the place. So those are just a couple of examples of how we look at social value.
Amazing. So how would you as a bank balance those financial and social objectives?
It's a great question, and when we think about financial returns, particularly in the context of social value and environmental sustainability, we talk about a sustainable return. So what is as I talked about before, what is the impact that we're trying to create? Now we've got to remember that we're a PLC, we have shareholders, and we need to deliver an acceptable return to those shareholders. I think they might get grumpy if we continue to deliver business that was below a certain threshold. However, what we do have the latitude to do in some cases is take more of a view on certain levels of return if we know that the impact is going to be significant.
Yeah.
So what we're trying to encourage our colleagues to think about is what's the environmental, social and economic impact of the work that we're doing, and collectively can that create a sustainable return? And as always, there will be trade-offs, and there will be some projects that we'll look at very carefully that will have a clear social narrative, very clear, very demonstrable social value, and that's one where we'll be prepared to take a view. There are others where it's less clear-cut, and again, without naming names, there are some projects that come forward that don't have particularly compelling social narrative, and we have to filter those out, because ultimately I think our shareholders would be disappointed if we were committing to projects where there wasn't a genuine impact that we could talk to. All of our work is published in our annual ESG reports. It's going to be out in February with our annual results, and our investors will scrutinise it, and it is audited. So we need to be able to demonstrate a very clear audit path for the work that we're doing.
Amazing. Do you, through that work, use a particular framework to evaluate those projects, or is it kind of on a case-by-case basis?
We do use a framework, yes, and we have a separate team that is responsible for the governance of that. And what that team will look at typically is the geography, the index of multiple deprivation, the impact that's being created, whether that's contributing to local jobs, whether it's creating additional units of housing, social, affordable, etc. Whether it's delivering positive environmental outcomes, so if it's a particular development, it may be BREEAM Excellent or an equivalent rating. So what we try and do is pinpoint where it's happening, exactly what's happening, what's the impact that's being created, and how is that being measured over time.
Amazing. So when you're deciding to kind of prioritise that social value, you talked about shareholders and needing to make that return, but actually they want to see that social value. When you are prioritising that, what are the kind of challenges you've come across?
I think in some cases it's trying to get across in simple terms to busy people what the impact of a particular project is and why it's important. And it's really important, I think, to get that narrative right first, because until you can set very clear parameters as to why you're recommending this project and the impact that it creates, then I think it's hard for people to follow that. The narrative itself, I think, generally is still quite nascent when compared to environmental sustainability. So I think it is important that you take people on a journey and share clear rationale as to why we're doing what we're doing. As always, there will be tensions, natural tensions that arise in terms of capital allocation. Our investment committee will sit and say, right, I've got 3 competing proposals, some of which demonstrate different levels of return. This one delivers an excellent level of return, but less impact. This one delivers an acceptable level of return, but very strong impact. And these are quite difficult trade-offs to make. But as always, we put clients very much at the centre of these decisions, because ultimately clients are our lifeblood. And we think very carefully about the impact that it's creating. I won't say the decision-making process is always easy, but we usually land on the right result.
Amazing. And so can you tell me, potentially an example that you have within this sector, where you're talking to a developer or a big construction business and they're considering gaining finance, but also considering the level that they build in social value to that proposal?
Of course. So we're, and hopefully this will be something we can announce next year, but we are working with an investor, in fact a couple of investors, and a very skilled development manager, looking at how we can allocate greater institutional investment into some of the more challenged, or say most challenged neighbourhoods around the country. So this is where the housing stock is either particularly old, so in some cases pre-1940s, so pre-Second World War, or is particularly leaky, or there are particular regeneration challenges within the site. And the development manager we're working with is extremely skilled in this area. That's their discipline. And it was very clear from the outset that both with the developer and the institutional investor, we all had very, very similar values, and we felt this was something that we needed to target. We're working in one particular city location to test a pilot for the scheme, and we hope to be able to announce the results of that next year. What excites me about it is we think it's wholly replicable, wholly scalable, and can extend to other cities across the UK. And this is where we're deliberately choosing to put institutional investment where there hasn't been any before, and regenerate neighbourhoods that are in desperate need of it. And it's how we create a vehicle to do that, where you can bring shareholders of the developer and the investor along with our shareholders on that journey. It's early stages, but we're excited about what could come next.
You mentioned a lot about that narrative and that storytelling. What have you seen that's been amazing on that storytelling piece?
I guess, well, if I think about my own experience, really, until 3 years ago, I didn't know what a CDFI was. So talking to practitioners in the States, understanding what this market for community development finance actually was revelatory, I have to say. Market in the States for enterprise lending, $50 billion a year for these small community banks that do amazing work, microfinance as we would know it, and really help support businesses that can't get access to traditional sources of funding. And when we came back to the UK, we realised that actually the market here is very modest. It's about 200 million of enterprise lending a year. So talking to the CDFIs, it became very clear that there wasn't sufficient wholesale finance for them to scale, to professionalise, and to address what's a considerable market gap. Because if we think about the US market for CDFI lending, $50 billion, even if you adjust for the relative size of the economy, that would suggest that the market in the UK should be £4, £5, £6 billion, and in fact it's around 200 to 300 million. So there's a real opportunity for CDFIs to scale, but they can only do that with help from mainstream banks and other stakeholders to grow and professionalise. We're genuinely excited about the prospects for CDFIs in the UK, and we think there is a flight path over the next 5 years to create £1 billion worth of wholesale finance, and hopefully over the next decade get us closer to the model that's proven so successful in the States. So for me, that's been something that was really revelatory.
Amazing. And you can definitely see that trickle down to local communities, SMEs, where the impact is actually being created. So that's amazing, and I look forward to seeing that develop. What does social value mean to you personally?
Well, I guess growing up in the West Midlands, I grew up in Coventry during what was a particularly difficult time for the city. And as we saw an exit of manufacturing during the 90s, a transition to a services-led economy, mass unemployment, and some really challenging conditions, it was very clear that in terms of economic growth and prosperity, we can't let communities fall behind. And that's exactly what happened in my hometown. When I visit other parts of the UK, whether it be, I was in Doncaster on Friday, meeting with one of the CDFIs that we know very well there, 30% of children grow up in poverty in that area. So as we approach the UK's just transition, as we think about the priorities for the UK over the next decade, what we need to ensure we avoid is a repeat of history where in the last, industrialisation, many jobs were sacrificed and many communities left behind. And you can pick any example, whether it's Coventry or whether it's South Yorkshire. I think with the just transition that we're now embarking on, where the focus on net zero and green jobs is a huge one, we need to make sure that we don't leave communities behind. And I think by focusing our minds as a financial institution, we have an obligation, we have a responsibility for the communities that we serve. We can create a very strong and positive narrative to make sure that sort of value isn't overlooked. And it's starting to catch on. The more people we talk to, the more corporates we talk to, they say, that's interesting. We don't have that. Some of them are very far advanced on their journey, some less so. But I think collectively we can make a much bigger contribution and make sure that communities aren't overlooked.
I'm a Cov girl as well, so I definitely recognise that. Just finishing work and my part-time job while I was at school and college, there was such a huge homelessness population. It's crazy, and I think we're right back in the same situation, aren't we? And actually, big banks, CDFIs, SMEs, social enterprises, we all have a place in that puzzle to
Yes.
try and fix these things. So
Absolutely.
that's great. What's your one key piece of advice for the construction sector, whether that's big developers, construction companies, supply chain partners, or some of the local authorities or regional or even national government in this area?
I guess my ask would be genuinely commit to placemaking. Try not to think just about the asset that you're delivering. We understand that that's what fuels your business and that's your focus, but try and think about how you're interacting with the place. Commit to placemaking. Think about the value chain that is going around the asset that you serve. We know it's a tough industry backdrop for many corporates, not least construction. But wherever possible, think about your impact on the place.
Amazing. Thank you.